Hello everyone. This is Rishabh, accompanied by Karthik and Ratik. We will take you through the macroeconomic update as well as markets update for the month. So let's just dive into it.
So before we get into the details, just a quick recap. Consumption is 70% of our GDP. Investments is 2%. Government spend is about 27%, and then you have your export minus imports, which weekly works out to about 1%. These are the four core variables we've gone through last month and the month before that, and these are the four key variables we're going to go through this month.
So looking at consumption as a variable of GDP, we have tracked almost 6 to 7 variables under consumption, under which I'll take you through each one of them. Now coming to GST collections.
Just one sec. So last time, I think the feedback we got was that there's a lot of data points and it's difficult to conceptualize and get an idea of where we are headed on a month-to-month basis. So what we've done is we've created this slide to help you. It is color coded. I think Rishabh or Ratik will just run you through what the color codes mean to give you an idea of what the general gist of the economy looks like.
Right. Yeah. So when it comes to the green part, what we try to say is here that the growth in terms of YOY, basically compared to this month to the previous month same year, is higher, and the data for the current month is higher than the average of previous 12 months. While if you see a color coding of yellow, it is meant that any of the one variable is positive while the other is negative. And if we see red, it means that both the YOY is negative and the data for the current month is less than the average of the previous 12 months.
So just to keep it simple, there are two things. If the year-over-year figure is positive and the figure is higher than the 12-month average, we color it green. If one of those figures is negative, we color it yellow. And if both the figures are negative, we color it red. Right? To give an example, if you see GST collections from October to March, it's green, which means that every single month, the year-over-year growth was positive, as well as the average is for the month, the figure is higher than the average. So we'll focus really on the consumption because that's really 70% of our GDP. And what you're seeing over here is essentially most of the cells from March to October are all positive and in green. We're seeing a slight change over the last 2 months where it's turning yellow. And what that really tells you is that we are still growing, but the rate of growth is slowing down. Okay? The factors that we've taken into consideration over here are GST collections, power generation, petrol consumption, passenger vehicle sales, payroll, which is we've looked at the number of people being hired or on EPF, how many incremental people are being added to the EPF system every month, and as well as credit growth, right? So overall, if you really wanted to see how the economy is doing, and you could only look at one variable, you would look at consumption, and it's looking fairly robust. Okay? Should you want to know any of the details, if you move to the next slide, what we've done over here, it looks cluttered. There's a lot of data. So we will send it out to you post this discussion. It's giving you the average, it's giving you the current, and it's also giving you the color scale to give you an idea of where we stand. We're going to skip this slide because it's just too much data for such a short presentation. But we can send it to you. Right? Go ahead. Let's do the investments.
Yeah. So on the investment side, what we see is like for the current month, it has been positive side on the basis of the average 12 month, and for the current month. But what we see is that there was a slowdown and the negative from March to June, while the later on what the FIIs have put in money, so there was a positive in August and July. And again, the rate hike and everything has considered, and that has turned negative. So overall, the market seems to be volatile in terms of the investment from the FII and the DII side. and that's something which is basically a very vague as of now. And for the month of October, what we saw is the positive terms.
So the good news, I think, is on the consumption side. The summary on the consumption side that it's growing, but the rate of growth is slowing down. On the investment side, we broke it down into FI plus DII. You can see a lot of reds over there. The FIs have been pulling out money, but that has sort of reversed in the month of October. FDI data doesn't come in every month. So once it gets updated, we'll check this. But what we do expect now is for FDI data to be fairly negative. Because we do think a lot of these, from the data that we're seeing, a lot of these IPO company shares now can get sold, and it looks like a lot of these funds are going to be selling out of it, right? So bad news or not good news on the investment side, great news on the consumption side so far. And now we move to the government accounts.
Right. So moving on to government accounts, we see a lot of greens in the tax receipts, because during the year, as GST collections and tax collections have been going up, the revenue receipts for the government has been going up. Simultaneously, the fiscal deficit has been increasing more and more for the current year. Currently, we stand at around 53% of fiscal deficit for the entire economy, which is way lower than the pre-COVID levels, but still at a higher level. So moving on to foreign trade, although it constitutes only 1% of the GDP, but it's a significant factor to be considered on how it affects on the macro. So what we are seeing on the both on the exports, import sides is basically a negative, wherein the imports have been higher than the previous 12 months, and the current month is higher than the last month, same year. And for the exports, it's again on the negative side, where the exports have been lower on the lower than the average 12 months. So overall, the foreign trade seems to be a negative and a slowing down effect that we are seeing. That could be a reason of the depreciation in the rupee, and also the inflation effect that we are seeing in all over in the geopolitical, basically in all over the economy. Okay. So looking at the general variables that we track, which is unemployment and inflation. Now we've seen unemployment to be at its peak for a really long time, but for the month of September, it has come down to a acceptable level. But we see the data for October to be again deteriorating. Again, coming to inflation, we see inflation to be at a higher band than the expectation by the RBI. Expectation of RBI is between 4 to 6%, and we currently stand at 7% there.
So then, to summarize, if the question was how is the economy doing, and since 70% is consumption gets a thumbs up. It's doing great. Investments also, I think, are not too bad so far. It's still holding up. Government accounts have been doing well for some time. The big issue is really in foreign trade, where we are importing more than exporting. The deficit is approximately about 2 lakh crores. We do have reserves of, I think, about 500 billion dollars or so, $550 billion. So that should help us for another maybe 8-9 months. But it's a huge concern because the rupee is also depreciating. So that's something we need to focus on. And of course, if you look at the unemployment figures, the question is, how are we doing well if there's so much unemployment? And what we've seen from some of the macro figures are, payroll data and all is fairly high. I think the unemployment stems a lot from the rural areas, and people going from poverty to below poverty. So this doesn't really affect GDP numbers, but it does affect quality of life. It affects I think it's about 1% or 1.5% of all Indian citizens, which is not very good. On the inflation side, even though we are above the limits, it looks like we have a hold on it. A lot of the inflation that is caused isn't really demand side inflation, it's supply side inflation. So I think some of that would take care of itself. You should see that going down in the next couple of months. So overall, if we had to give a rating, I think we give it a yellow.
Yeah.
Right.
It's growing, but at a slower
At a
pace.
slow pace. Okay. We'll skip this. Yeah, it's too much. Then I thought we thought that this would be interesting for you guys. This is not really educational, but it's just fun facts. For the month of October, we really put up the top gainers and the top losers in terms of the sectors on the left, and the top gainers and the top losers in terms of the companies on the right. Top gaining sectors are banks, about 27 banks over here, and that's about a 14% gain. Capital goods, 8% gain, and non-ferrous about 8%. The biggest loser would be plastics, then agri, and then retail. Go back there. Anything on the company side? Canada Bank, it's up 37%. It's part of our PMS, our own fund. India Bank has gone up about 31% on a revaluation. And Tata Elxsi is a company that we held. We have sold it. We have made about a 500% gain over there. And it's out of our portfolios, but it is in some of our portfolio managers' portfolios over here.
Yes,
right? It had run up, so it's fair that it corrects now with the rest of tech correcting.
So one thing what we can note over here is basically the inflation effect to be having an effect on the sides, base sector sides. What we are seeing is plastic being the negative. Their results of the plastic segment as a whole was negative on the revenue and the PAT margins, and also on the retailing side. So an overall effect of inflation is affecting the consumption, and that's affecting the revenue again. So to summarize the entire thing, as Karthik mentioned, from a macro perspective, we have a conclusion that currently it looks like there is growth, but at a substandard pace, and we give it a green or we give it a yellow rating. And for the BSE 500, what we see is the revenue being slowed down, and also the price to earnings are remaining at the same levels. So again, basically a consistency what we are finding out over the quarters and the months.
So if you look at the bottom half of the slide, we've taken the top 500 companies in India, and what we've done is we've looked at the revenues quarter over quarter. So you have 4 quarters here, it's 1 year. And what you've seen is, revenues have gone from 28% to 26% to 26% to 40%, right? So that's a big jump in revenues. And from a quarter-on-quarter basis as well, remember there was the corona effect on the earlier quarters. So the jump looks high on a year-on-year base, but on a quarter-on-quarter base also, you're seeing a high jump. Some of this is because of actual units growing. The second reason why you could have seen this is because there has been high inflation over the last 4 quarters. So you've got to keep both in mind when you're looking at these revenue figures. It isn't as rosy as it comes across. From the price figures, what we have at the bottom of the slide is really showing you for the top 500 companies, how the price of the companies have grown. So from, in a quarter, it's grown by 9% to 5% to 4% to 3%. So anybody who's really invested in the last year would have you would have done fairly well in terms of the prices, right? The PE ratios are fairly consistent. Maybe 22 is a little expensive. We think it should be around the 20, 21 range or so. So holistically, if you're buying the whole economy, the chances of a revaluation are fairly low. But you did see consumption increase, so you should see some sort of growth in the EPS figures. Right? So I think that's the conclusion over here. Things are looking quite good so far in terms of the fundamentals. We'll wait till next month to see how this turns out. Should you have any questions, please feel free to reach out to us, and we can go ahead and share the slides with you as well. Thank you.
Thank you.